Hey guys, Scott here. Quick one, Happy New Year. Hope you guys all had a great break and got some time away. All right, let's get back to where the property market actually is at. Because this forecast generally stopped me in my tracks. Because REA Group, PropTrack, realestate.com.au, whatever you want to call them, they've just dropped modeling for what Aussie property could look like by 2030. And I know what you're thinking. 2030 is ages away. Well, really, guys, it is not. You are now closer to 2030 than you are to when COVID happened. So if you think this is some far off problem, it's not. And the numbers in this modeling have got the media going absolutely nuts, because if this plays out even half close to what they're showing, housing doesn't just get harder, it's actually going to be catastrophic. So stick with me, because I'm going to show you the city by city numbers and what this really means in the real world. And then I'm going to give you the one mindset shift that stops people getting trapped on the sidelines while the market quietly runs away from them. Let's get into it. Before I get into REA's numbers, I do want to quickly say this. Liana and I have been talking about these kinds of 2030 numbers for a while now. We do run webinars regularly, and we've covered where property ends up by the end of this decade multiple times. These aren't new ideas to us. So when I see reports like this come out, my reaction, honestly, it isn't shock. It's more like, yep, okay, now everyone else is starting to catch up and see what we see. It's the same thing we saw with the 2026 forecast. When the big institutions publish them, I look at them and I think, yep, that's where we were already landing. That's where our direction had already been mapped. Anyway, with that context, let's get back to what REA and PropTrack are actually saying. First, quick clarification, because this matters. PropTrack are not saying this will happen. They're modeling what happens if the growth patterns of the last 5 years repeat into 2030. So think of it like this. They're basically saying, here's the direction. If Australia keeps doing what it's been doing, here's where it will land. And whether you love this, hate this, agree or disagree, the point is it shows you how extreme the last 5 years have been, especially in cities that used to be considered affordable. All right, here's what's got everyone talking. In Sydney, for example, PropTrack's modeling suggests the average Sydney house price could push to around 2.4 million by 2030 if the last 5 years repeat. That's nearly $1 million higher than today, according to this article. And here's something people miss. They're also saying that units don't move the same way in that scenario. Apartment prices rise much more modestly, about $80,000 over 5 years in their modeling. Now zoom out. Across the other capitals, the modeling that's being quoted everywhere is basically saying Sydney up around 61%, Brisbane up around 68%, Adelaide is up around 75%, Perth up around 66%, Melbourne up around 17%, Hobart and Canberra up around 40%. Again, not a forecast, a trend extension scenario. But even hearing those numbers should do something to your brain. Because if you're sitting there thinking, surely the worst is behind us, this is the type of modeling that tells you the worst might not have even started. So why would a scenario like this even be on the table? PropTrack's economist is pretty clear about what's still entrenched. We still have a housing shortage. We still got strong demand. There's still very strong population growth. We have a very strong employment rate. And we've got a ton of equity sitting with existing homeowners. They have so much equity there that they can recycle into investment properties. And that last one matters more than people realize, because once a market has stacked up equity, you create this very powerful chain reaction. People sell, they roll equity forward, they upgrade, they bid harder, and they set a new price floor. That's why prices that felt insane 2 years ago suddenly feel normal today. Most of what is happening in the market is this equity recycling. Now, here's the bit I really want most people to hear, and maybe the biggest lesson of this video. Most people don't miss out because they're lazy. They miss out because they get stuck in what I call mini cycle thinking. They go, okay, rates might rise, I'll wait. Market might soften, I'll wait. News says the market's cooling, okay, I will wait. And then 12 months goes by, and the same person who was waiting for a better time is now staring at a market that's moved 50, 100, 150K. Not because they were wrong to be cautious, but because they zoomed in on one variable. Rates matter, yes they do, but rates are not the whole story. The long-term trend is driven by market fundamentals. The biggest fundamental in Australia is extremely simple. We do not have enough housing for the demand that exists. So the market does what it will always do. It runs, it pauses, it runs again. Boom, stabilize, boom, stabilize. If you're sitting out waiting for the perfect entry, you don't realize you're paying a price every month you wait for. So what do you do with this? If you're a first-time buyer, stop thinking like the market will politely come back to you. If you're active now, you often have more negotiating power than when the herd rushes back in. If you're a homeowner, this is a reminder that the biggest wealth gains often happen quietly over time, not in one big boom headline. If you're an investor, do not confuse short-term pause with the end of the trend. The market doesn't need perfect conditions to rise. It just needs that supply-demand gap to stay broken. And right now, it is broken, and the system to correct it is broken. Now, I want to know what you think. Do you look at this 2030 modeling and do you think it's realistic, or do you think it's media hype? Drop a comment with your city and your take. And if you disagree with me, even better, tell me why. As always, this is your property update, your 5 to 7 minute breakdown of what's really happening in the Australian property market so that you can become a property insider. Make sure to hit subscribe so you never miss a video.